Harlan, thanks so much for joining me. I'm glad to have you back. This subject is very important to me and somebody who studies cash flow and retirement. I spend a tremendous amount of time talking about mortgages. It's very important for people to understand what they need to do. And I've told all my clients, if everything was the same and I was 62 years old, this is exactly what I would do. So I'm glad to have you back on to talk about this. And I really want to kick things off with this concept of reverse mortgage vacations. I want you to open with that and talk about that because that's the first time I've heard that, and I think it's incredibly powerful.
Well, it's cool. It's just kind of something that happened in our family because I've been doing reverse mortgages for other people for 20 years. I started this when I was in my 40s and now I'm in my 60s and I got to get my own reverse mortgage a couple of years ago. And when I did, it was just really cool to see that your balance in your checkbook kind of kept going up because you never had to take out that big mortgage payment at the end of the month or at the beginning of the month.
Yeah.
And so at the end of the month, there was more money left. And so I said to my kids, we have four sons, and I said, hey, we're going to start a new tradition at the Accola household, and we are going to do reverse mortgage vacations. And there's only two rules. You have to plan it because I hate doing all of that planning stuff. And you have to take mom and I along. That's the only rules. And they took us up on it. So far, we've been to Europe, a couple of places in Hawaii and Mexico, and we just took an Iceland trip. And we believe now in making memories, not mortgage payments. And it is a lot of fun and it is really awesome. And I'd rather spend that money now than save all that money up and then they go on vacations without me after I'm dead. So maybe it's kind of selfish, but I love being able to go with the kids and the grandkids to have these great memories and travel all over the world.
That's so incredible. I've been really encouraging a lot of my clients that are in the position to take their family on vacation, do things with their family, and make memories. I've had nothing but amazing feedback, like incredible trips and memories of a lifetime of people building up. Everybody wants to pay off their home in retirement because they feel like it's safe. They feel like it's the right thing to do. And then they're going to leave that equity to their kids just kind of by default when they pass. It's not really like intentional. It's just like, oh, well, they'll get the house, right? What has been your experience with your kids, like making these memories while they're alive? Like, what is from their point of view? What have you learned in this reverse mortgage for vacation that you're doing?
Long time ago, a financial advisor told me, asked me, do you want to give your money away with a warm hand or a cold hand? And that just stopped me right there. What do you mean? Well, do you want to give it away when you're dead or do you want to give it away when you're alive? And I said, well, I haven't thought about it much, but I guess it makes more sense to give it away when you're alive. That doesn't mean that you blow all your money and you do stupid stuff and you just waste all your money. It just
Mhm.
means that nobody leaves this earth without everybody knows you can't take it with you. The pharaohs tried that a long time ago, and it's all in the pyramids over there in Egypt that's still there. They tried to take it with them, it didn't work. And so if we can't take it with us, then we know we're going to have to give it away. Why not start giving it away early rather than waiting until you're on your deathbed? And now I can enjoy this with them and I can help them. And we also do things just to help them buy a house or help them do home improvements or whatever, so that they're in a position where they can do some of the things that they need to do when our grandkids are little as well. So it just really comes down to the fact that there's an illusion of safety, that if I've got my house paid off, I'm safe.
Yeah.
Well, that's not really true because the more money you put into your house, the less money that you have to spend. It's just stuck there. It's in a lockbox and you can't get it out unless you sell it or you mortgage it. And if you mortgage it, you have a payment, unless you do a reverse mortgage and then you can pull it out and you have no payment. And the increase in equity in the future is the money that takes care of it from there.
Wow. So touching on that, a lot of people don't realize because they don't run the numbers on how inefficient a home is in terms of like a wealth transfer vehicle. We were just talking about a lot of people tend to think that this is like a last ditch effort. Like people do reverse mortgages when they have no other option. But we were just talking about a couple of multi-million dollar deals that are going on right now. Talking about why wealthier people are using Roth conversions and life insurance instead of using a home to transfer their wealth to their heirs.
Well, there's an automatic belief that one of the best ways to pass on wealth is in real estate. And it's not a bad way to pass on real estate. You get the step up in basis. And so automatically people think, well, that's the best way to pass on wealth. Usually it's by default that that happens. People don't put a lot of thought into it because they are just living in their house and they don't think about selling it like they would some other stock investment. But the truth is that the most efficient way to pass on a legacy is with either life insurance, guaranteed death benefit. Doesn't matter when you die, the death benefit is exactly the same. What if you die in a year like 2009? Your house is worth a lot less than it was worth in 2007. With life insurance, it pays out exactly the same amount on the death benefit whenever you die. And
Mhm.
so it's tax free. So it's very efficient to pass that on with in a situation with life insurance. Roth conversions on IRAs, a lot of people say, well, I'm not living off my IRA. I can give that to my kids. In a legacy situation, there is no question that a Roth is just as efficient as a life insurance policy in most cases, because the kids don't even have to sell it when parents die. They can keep it for what, another 5, 10 years or whatever, and let it continue to build tax free. And so Roth conversions in life insurance run the numbers. One lady told me, I don't believe in reverse mortgages. And I said, well, this is a math-based product. It's not a faith-based product. Uh, so just look at the math. It makes more sense to give your kids Roth conversions or life insurance instead of the house. And the thing is you're not giving up your house. I want to make it very clear. If I died today, I've got almost $1 million worth of equity in my house, even after I have my reverse mortgage. So
Mhm.
that money still goes to my kids, whatever's left. They don't lose the house. They just don't get as much because I've got more money in those other products that are really better for transferring wealth. And when I have it in life insurance and I have it in Roths, that's money that I can also give them while I'm alive instead of waiting until I'm dead. So
Right.
the power of the living benefit and helping your kids while you're alive, because you can give them. Somebody told me once, it's really bad to give kids wealth without wisdom. When you're alive, you can give kids wealth with your wisdom and help them understand the best way to invest it or save it or spend it, whatever the case may be.
That makes total sense. I completely agree with running the numbers and figuring out what's best for each individual person. And so tell me this. I want to close with this, Harlan, because obviously, you have an incredible book about this. We did a whole other interview that I'll point people to afterwards, where you broke down your specific strategy with Roth conversions, which I thought was incredible. For people who this makes sense for, but they have like a preconceived notion or some old stigma that reverse mortgages are like scams or bad, what would you tell those people that could actually have tremendous benefit in their retirement and the rest of their life, but are kind of stuck on this idea that there's something wrong with this? What's your message to them, or what do you tell people that you sit with every day when you hear that?
Well, it took me 90 pages in my book to answer that. But so if anybody wants the book, I'll certainly get you some copies so you can hand them to the clients that are listening to this.
Okay.
Uh, but it's really this simple. There's needs-based reverse mortgages and that's where people have branded it that, oh, when you're broke, you get a reverse mortgage, and then you give up your house and you lose your house. And that happened prior to 1988 before they became federally regulated. And there were a lot of scams out there. People say, well, if there must be a reason, a scam. If people think this is a scam, maybe there's a reason why they think that. Where there's smoke, there's fire. But the issue is there were some really bad reverse mortgages that weren't really mortgages. They were investors giving somebody money and allowing them to live maybe 5 or 10 years into in their house. The loans that we do at Movement are loans that specifically are guaranteed and regulated by the federal government. We cannot rip people off, even if we were dishonest. You can't do it with a HECM reverse mortgage. It's the limits on the interest rates, on the closing costs, on how they can be used, and so on. So people have to get that out of their mind, and they also have to get out of their mind that they're giving up their entire house. They're only giving up part of their house. It's no different than having $1 million IRA and spending 100,000. You still have 900,000 left. Well, if you got $1 million house and you use 100, you still have $900,000 left. It's the same thing. You didn't lose your house, your $1 million house. You just gave up and spent $100,000. So what people need to think about is, yes, there's needs-based products that people got roped into because they were in a desperate situation. The vast majority of loans that we do now are wants-based. They're part of a plan in conjunction with a financial advisor like yourself, where this is part of, when do we draw Social Security? How should we pay for Medicare? How should we pay for long-term care? How should we create retirement income? This is all part of that overall plan, and that's where it's once-based. And there's so many people that say, well, that's just for poor people. That's just for broke people. That's just for people that didn't plan very well.
Mhm.
No, we're dealing with people that have millions of dollars in their house. One unusual one right now, $27 million home that they're pulling out $10 million to do some other investments and enjoy life with. So this is not about, many people think that this is something that is only for a small segment of the population. It's for everybody that owns a house that are over the age of 62. And take a look at what the options are. And fortunately, they're dealing with someone like yourself that looks at all of the options and putting this together. And there's so many advisors that don't even count home equity into it. And think about that for a minute. There's about $14 trillion worth of money sitting in people's houses my age, 62 and older, 14 trillion. And most of it is unmanaged.
Wow.
Nobody manages it. But because of people like yourself, you're managing this for your clients, and your clients need to be very thankful that they're dealing with someone like you that is looking at the whole picture. Even though you don't make one dime on a reverse mortgage that's done, you recommend them simply because it's something that fits in with the rest of the planning that makes their life better. And if you look at the math, that's really what people need to do, and realizing that, hey, there's some options here.
Yeah, that's exactly what people need to do. So if anyone here out here is watching this and you want to run the numbers, you want the math, please feel free to reach out and I'll connect you with Harlan and his team, and they'll run the numbers for you to take a look at this. So I hope everyone enjoyed this video. I always love having Harlan on. I always learn something incredible. This man is really changing the landscape in terms of how people think about this, and it's improving people's retirements every single day. So if you want more information about this, check out this video Harlan and I did last year where he breaks down his Roth conversion strategy with this, and I hope everyone enjoys, and we'll see you soon.
Thanks very much.